Hello, everyone. Thanks for attending this webinar. So we will be starting soon within 5 minutes. We just wait for more participants to come in. Hello, everyone. Welcome to this post-US presidential election and the impact on global markets. Today, my name is Wanxin. I'm a dealer from Contract for Differences. So actually, first of all, I would like to introduce about PhillipCapital for those who are not familiar with us. So PhillipCapital are an integrated Asia financial house with a growing global presence, And we are now expanding our office into different countries. And for now, we operate in the financial hub of 16 countries. Okay, so for today, right, as a host of this webinar, I will be talking about the current election situation first. And it's ending soon, basically, until the January when Trump is supposed to move out from the White House. And after that, I will talk about some summary. I will talk about the summary about, sorry. So after the election, during the election situation, after the election situation, I will talk about the summary of the corporate tax policy, finance, and the technology. And this summary actually is for those who were not convenient to attend the pre-election webinar before. And these three sectors are quite important with Biden's winning. Okay, so after this pre-summary, right, I will focus on ESG concept. Why? Because as we saw the results come out after the election, actually ESG stocks has been one of the attractive sectors coming into investors' eyes. Therefore, I would like to talk about ESG investments for those who are not familiar with this, because ESG is still a very young concept, but it's trending now. Last but not least, I believe a lot of people want to understand more about the US-China trade war, especially how well this US-China trade war goes. And this is one of the key topics that is very, very hot. Okay, so just a quick summary about this election. It was very dramatic with Trump's action, and from the statistics, Biden has won this election, and it has been confirmed today. And there will be some there was some regions recounting, but it didn't influence it at all. And during this election, the markets also fluctuate a lot based on Trump's actions. And we all know that actually Trump signed some document that US companies are not allowed to invest in Chinese military companies. So how to define this military company? We will also talk about it later. Yes. So first of all, the summary of corporate tax, finance, and the sectors. The reason why I choose these three sectors because they are very important, and that they influence our life a lot from different aspects. And I will explain it to you after during this journey. First of all, corporate tax. So I believe if you attend the pre-elections webinar, you will understand why corporate tax is so important. Because it is a policy will impact all the industries. It not really focus on finance or technology or even manufacturing infrastructure. It impacts all the industry around us. It is a tool for the government to support or restrict certain development. So for example, right, if I want to restrict the development of the technology companies, I may pose a very strict tax policy on those companies to increase their operating cost. And the importance of the corporate tax actually lies in the two main aspects. So the first aspect is government. To US government, corporate tax is the third largest sources of federal tax revenue, which can be used to put in other government support scheme. So means the money received from this corporate tax, right? The government can use it to support other industry development. This is like government action. And to corporate, actually, the corporate tax does impact the profitability. It is very easy to understand. So means the increase in the corporate tax rates, and corporate will pay more in terms of their tax, basically will be considered as their expenses, right? And the cost, and it will reduce the profits of the business, of course. And the decrease in corporate tax rates will also increase the profits of business, and the companies will have more money. So if companies have more money, right, they will have several things to do. So the first choice is if there's a low corporate tax, they can expand their business further with the extra cash. And also they can increase the size of capital, wage, and also employment. The second thing the those company with low tax corporate tax rate do is to pay the dividend. So with a low corporate tax rate, they will have more revenue. That means when they pay out the dividend, they will have more cash to pay out the dividend. And normally, if the performance is good, the company will pay high dividends, which will benefit our as investors. But last but not least, the company will also be able to buy back shares. The dividend and the share buyback will have positive impacts on the share prices. And this is just a summary of why corporate tax is very important and how corporate tax will impact government as well as corporate. So under Biden's proposal, actually Biden's proposal is to increase corporate tax to 28% and use the money to upgrade infrastructure and shift towards a clean energy future. So I want you guys just pay attention to the infrastructure and clean energy future. Why? Because this is a government focus. It can be considered as a direction for your future investment point. Okay, so what is the impact? Increase of corporate tax, and the corporate will have less cash for business expansion, dividend payout, and the stock buyback. And based on the logic, right, they have more cash, then those dividend payout and stock buyback will have positive impact. And in this case, increase of corporate tax, well, this policy will have less positive for share price, especially for those like high operating cost company. However, with the government focus on the infrastructure and the clean energy future, the business operating in those industries are likely to benefit, and they are more likely to develop during the next 2 to 4 years. After we talk about tax policy, we will talk about the finance proposal by Biden. Why finance is important? Because we are invest in the global markets, and it is also considered as the overall is considered as finance market. So basically, the finance policy will also impact a lot on our investment. Before we talk about Biden's proposal, we need to understand what is the very fundamental model for the traditional financial industry. So as we all know, for bank, right? Deposit has the interest rate, and the lending same also has the interest rate. The revenue for the traditional finance institutions like bank is from the interest rate differences. And this is the very, very, very fundamental model for those finance institutions. However, what Biden proposed is to strengthen the regulation on the lending part and also strengthen and make the lending part, the cost very transparent. For this, utilize Consumer Financial Protection Bureau, right? Means corporate, for those finance institutions, they need to spend more in terms of their KYC processes. And with this policy strengthen on the lending part, it will increase the operating costs for those finance institutions to lend their money. So in this case, this strong regulation will incur higher operation costs, and this may also cause the lower profitability for those traditional finance institutions. Meanwhile, because we talked about tax policy before, and tax policy also have impacts on the finance sector. As they are increase the corporate tax, and those corporates will slower their business expansion, dividend payout, and stock buyback. And these three main activities are considered the finance activities for those normal companies. And the slowdown of these corporate finance activities will have a relatively negative impact on the overall global markets. However, as I mentioned before, the keywords for the corporate tax is the infrastructure and the green energy, right? So if the government focus on this part, it may have a higher loan demand is specifically just for infrastructure industry. So in this case, right, when you consider about your investment portfolio, you may try to shift your directions into those the US government would like to focus on and try to find the right counter to do the investment. And the last sector we would like to talk about is technology. And these five actually are the companies accounts for around 20% of S&P 5's market value, and we all know about we are all familiar about these counters. It's quite the price is quite high, and it has a very high market value. However, what Biden wants to do actually is he wants to break the big tax. We all know that during the Trump's presidency, so he started the investigation of the antitrust, and Biden has the same attitude. He want to do the enforcement of the antitrust policies and try to break down those big techs and provide more support for the medium-sized new technology firms. And other than the big tech, right? He also want to strengthen on the content censorship and the data privacy for those social media company as well as those data generating company. So for those company, right, this kind of regulations as well as the policies will also incur a high operating cost for them because they need to put more resources into this data privacy and also the content censorship. Other than the technology, other than the social media, big tech, there's one thing we need to pay attention is infrastructure. So from the Biden's proposal, there is a 2 trillion USD climate plan. So actually, this is part of his climate plan. Then this infrastructure proposal actually is support the infrastructure expansion and the emphasis on the green energy related infrastructure. So what is his plan? We can see there's a lot of focus on the transportation infrastructure, which is related to our lifestyle. But there's two things I would like to focus on. First of all is broadband construction. So why the government want to focus on broadband constructions? Because it is an infrastructure of the it is one of the key infrastructures for the 5G. Another one is 1 billion USD dollar will be used for smart city project every year. So what is smart city project? For smart city project actually will be related to ESG, which I would like to focus on today later. So smart city means you can you can manage the city by using different like technology, for example AI, data, and you can arrange the city plan just using the algorithm. This is one kind of the social impact progress. And also I will talk about the related ESG later. So this is just a summary of Biden's proposal on this corporate tax policy, finance, and the technology. And this can give you some directions of your future investment when Biden moved into the White House in the next June. Okay, so now I would like to focus on ESG. And this is the main part of this webinar. So I will talk about what is ESG and why do we need to invest in ESG, or why do we need to do ESG investment, and how do we invest in ESG. So first of all, I would like to ask you guys about, do you know what ESG is? You may type your answers in the chat. I can understand if you guys know ESG before, because it is not a new concept, but actually it is a, how to say, it is not a new concept, but it's a trending concept. So anyone want to guess what ESG is? I have saw some right answers. Yeah, but also got people say no ideas. Okay, actually I saw some of you actually understand about, at least know what ESG is, and some of you actually are curious about what ESG is. Yes, come here to know. Okay, so ESG stands for environmental, social, and governance. Environmental and the social concept, actually these factors are quite simple to understand. So for environmental factor, actually is to see the operation impact on the environment, while social impact actually is to see the operation impact on the community. So it's one is on environment and one is on the public, is on yourself. I think governance is a little bit complicated. So what the governance factor is, it's not government, so it's governance in terms of the company. Governance actually is the internal system of practices, controls, and procedures a company adopts in order to govern itself, make effective decisions, comply with law, and meet the needs of external stakeholders. So for every company, right, they require governance. Take a very simple example. How do you treat your employees actually is one of the factors of the governance. So do you treat your employees fairly? And maybe the diversity of your company is also considered as one evaluation factor of your governance. So governance means how do you manage your company, the whole process, and also your value should be in the governance factors. And also I want to ask you guys, do you know why do we need to invest in ESG, and what do you think about ESG concept, and why do we need to invest in ESG? ESG is about environmental, social, and governance. But why do we need to do ESG investment? Anyone has any thoughts? You can also type your thoughts in the chat. People care about climate change. Yeah, I saw one keyword. I saw a very, very, very important word, sustainability. I saw all of you have your own thoughts lah, and I like the keyword like sustainability. Yes, when you consider about ESG investment, actually you are consider about the sustainability for long term regarding one company. So the one very direct reason that you need to invest in ESG is because Biden. We all know Biden is a environmentally friendly person. This is a very first direct reason. So so this the Biden's direct impact is on ESG. We can see after the results comes out, right? A lot of ESG concept, especially for EV cars like green energy cars, the stock price actually increased very fast and increased a lot. And this is really the impact from Biden's winning. However, we also need to think about COVID impact. Actually, you may also have this in mind that this COVID-19 actually changed a lot of investment strategy. So, as a result of this radical impact COVID-19 has had on the global economy in such a short space of the time, actually a lot of investors are viewing this crisis as a reminder of you that there's a need for a different approach to investing in the unforeseen risks of a pandemic and of other issues like climate change. For example, you also need to think about, okay, so COVID-19 actually is a unexpected issue, right? But it impact on the financial markets a lot. Then what we see during this COVID-19 actually is those who has a relatively high ESG position performance, they are more likely to survive during an unexpected issue, especially is an unexpected pandemic. And maybe in the future, right, the climate change will also cause a lot of other issues we may know, we cannot foresee. Then try to invest in those with higher sustainability will provide more possibility for you to guarantee your returns. So actually the COVID-19 becomes a major turning point for the ESG investment. But also you also need to consider about the traditional financial metrics like PE ratio, their revenue, right? But ESG becomes one of the important evaluation metrics with those traditional financial factors. And also with this COVID-19, actually there's also an increasing social awareness in terms of the ESG. We talk about environmental friendly in the past few years already, and actually the public now is paying more attention to the ethic factors. So the ethic factors is not only about environment, actually, it's also about human rights. It's also about maybe your work-life balances. So these are all considered about corporate ethical factors. And also there's some research shows that companies with good ESG performance is considered as competitive players in the long term. And I will also provide some statistics in terms of this statement. So in terms of the increasing social awareness, actually the BlackRock has done some survey in terms of the ESG after this during 2020, which is a very tough year for all the investment. Yes, and they actually among the 271 institutional clients they put in the 2020 survey, they are 66%, it's more than 0.5% of them has already included ESG standard in their investment strategies. So based on BlackRock survey, for those who already considered ESG in their investment, ESG consideration weightage become higher. While for those who have not considered ESG are also starting to thinking about it. So actually, this is a survey for institution clients. So means for those like fund managers and also that for those funds, actually they are now putting ESG in their investment strategies. So as a retail investors, what we need to do is we also need to learn from those like institutional investors investment strategies and apply it into your own investment strategy and modify it a lot. So as we see, ESG has become has been generally increasing the weightage in their assessment. So when we are doing the investment, we also need to consider ESG. ESG now has become a trend that cannot be avoided already. So some people may think about like high ESG performance means what? Means when you design a product, you need to put more resources to make it with high ESG performance. For example, you need to make your product environmentally friendly. You need to make your process. You need to make your production. So it's your process to make the product. Your production environmentally friendly, and you need to have a higher diversity in your workplace. And such behaviors, such corporate operations do incur higher operating costs, and it may compromising the returns, because when you don't care about ESG, right, your product cost may be lower. But when you consider ESG during the process and during the production, definitely your product cost will be higher. So this means actually the high ESG performance will compromising your return. And I would like to say it will be true in the short term, because in the short term, ESG is still not a very standard metrics. However, in the long term, right, high ESG performance is still considered as more sustainable. And here is examples for the 5 aspects of the company with high ESG performance provided by McKinsey. So from actually is from their researches, we can see no matter the front office, so it's top line growth. So this is considered as the front part, your market part. This is considered as your cost reductions. So as we all know, cost is very important when you are running a company, cost management. And even in the productivity part, your investment part, as well as your regulation part, those companies with strong ESG positions will have more chance to solve a lot of problems compared with the weak ESG propositions. So means what? So means if you have a strong ESG propositions, you may face fewer problems compared with weak ESG propositions. It's like an opportunity cost. So you invest more resources to improve your ESG performance. Then in the future, you will have a low chance to face different problem, maybe your employment problem, maybe your product problem, and even those like environment problem. So for example, environmental tax. But those who put 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 less resources in ESG performance, you may spend less money now, but in the future, you will have high possibility to face those issues which will cost a lot. So in this case, right, in terms of the sustainability, in terms of the long-term wise, when you're trying to screen your stocks, you need to have some metrics in your mind to see, okay, when I'm doing the fundamental analysis for this company, is it catering to high ESG performance, or is is the company is doing something towards improving its ESG performance. So how do we do the ESG investment? If you want to specifically invest in a counter, right? Actually, what I recommend to you is consider ESG metrics when you are doing stock screening. So it's very first step when you choose a stock. So it's during the screening part, you already consider the ESG metrics. You may have your own consistent assessment in terms of the company ESG performance. And this needs you to do a strong fundamental analysis, means you need to do a lot of researches in terms of what this company is doing, how this company is doing. Just give you very simple example. So it's when you do the research on certain company, you can ask yourself from the product, process, and people. First of all, the governance, a lot of information you can research online is all about people management. It's hard. It's relatively hard for investors, especially retail investors, to do the research on the compliance process. But for people management in the governance factor, it's easy to see. Okay, so for product part, you can think about, is the product contribute improving the society? Is it make people efficient? This product make people efficient? And or is it the whole process, the production process, environmentally friendly? And also maybe for the people management part, you can ask yourself, okay, does the company treat the employees quite fairly? This is the several questions you can ask yourself. But if you don't want to do so many researches on certain counter, right? You can consider some. It's called ETF. So actually for now, ETF, there are a lot of ESG concept related ETFs. So for those ETFs, they already do the screening for you, and they invest your money into different ESG concept related companies. And however, when you try to invest in ESG related ETFs, right, you need to pay attention to the ESG metrics those ETFs apply. Why? At this point, I would like to mention specifically, it's ESG investment is still considered as a young concept. Therefore, until now, there's no standard ESG metrics for us to refer. So what we are doing, what I am doing, and when you are doing ESG investment, actually you can refer to different big rating companies. For example, S&P. For example, S&P, those rating companies, Moody's Research, and they combine their ESG investment metrics with your own one. So in terms of ESG investment, right, you can either choose to invest in specific counter, which you need to do a very strong fundamental analysis, and also you can rely on those fund managers and invest in those ESG related concept ETFs. And actually, I do recommend retail investors to look into different ETFs, because for ETF, right, it can help you to diversify your risks. So basically, your money don't focus on just one counter, but can split into different counters within one ETF. So this is how I recommend you to do ESG investment. But the most important thing is you need to have your own ESG metrics in mind. But I hope in the following 3 to 5 years, maybe there can be one standard ESG metrics for us to refer. So for the company wise, they can have their standard assessment in terms of the ESG. So after we talk about policy, we talk about ESG concept, right? So next very important part of of this election actually is US and China trade war. I believe a lot of people heard about there's Biden actually Trump signed the document that he US government does not allow the US company invest in the Chinese military companies. However, they do not really specifically have a clear definition on the military company. So a lot of analysts and actually a lot of analysts, even the public, may guess what does the military mean. So I would like to say it's not only about military. It's not about those like airplane ships or even those guns, such things. I think it's about the key battlefield. So ships, right, can also be considered as part of the military use. So maybe in the future, if Biden didn't change this, right, those like high-tech companies will also become the key battlefield. So first of all, we will talk about the US attitude, I would like to say. So in terms of the uh, service wise, so basically it's the media wise, the US and China trade war, this tension may be loosened on the surface. Means, oh, okay, we may become a relatively we may have a US and China may have a better relationship in terms of the, like medium wise. So basically they want to start conversation, blah 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 blah, but actually the trade war will still exist in a different way. How? As I talk about, it's about main battlefield. So it's what is the main battlefield? It's high tech and intellectual property. I would like to say I believe a lot of people heard about this news about TikTok. The reason why Trump want to ban TikTok, but finally he didn't ban lah. The reason why Trump want to ban TikTok because TikTok's algorithm actually is very very smart and with the high value in the data. So data is part of the high tech. So actually the TikTok algorithm can process the data very very smartly. How? With the things with your content viewing on the TikTok, right? They can know what your behavior is and they recommend and give you the recommendation catering to your catering actually is catering to the context you would like to see. So means if you are viewing the food on the TikTok, okay, they so in the back end they will process the data. They will say, okay, you are viewing this kind of food, maybe based on the database they have. Okay, based on this food you are viewing, this food video you are viewing, you may have such behavior 1, behavior 2, behavior 3. So it doesn't mean you are viewing food video means you are interested in food. The algorithm will predict that you are viewing in this food video, so you may interested in this game videos. So based on the data they generated, they can process into different aspects in your lifetime and they recommend different content for you. And this one is considered as kind of high tech already. This is also one of the reasons why Trump actually want to ban TikTok. He does not want to ban TikTok as an app. He want to ban the algorithm, and he want to ban the data. Cause at the very first point, the data was stored in another server. However, when the TikTok and the Oracle come into the conversation to say, oh, I would like to store the data in the Oracle server, which is a US company, Trump actually say, okay, that may be okay. So means high tech and intellectual property will still be the main battlefield that US and China will compete with each other. So what about China? What China want to do actually, the first strategy China proposed for the trade war, I would like to say, is a dual circulation strategy. What does dual circulation mean? Dual circulation, of course, means internal and external. So for internal wise, China wanted to increase the dependence on the internal supply instead of external supply. So this is means internal circulations. I produce the thing domestically and I meet the demand domestically. So the internal circulation actually is to decrease the dependence on the import side. China want to focus on the internal circulation, and external circulation is like a support to the internal circulation. So means if it really cannot meet the internal design, then they will seek for the external support. So this dual circulation strategy actually can be considered as a method for China to counter the US-China trade war, and even to counter maybe maybe I would like to say more difficulties in the future. So if China want to increase the domestic production to meet the domestic demand. And we always know that actually in China the demand is always higher, but the domestic supply is not as strong as the external one. However, their focus now becomes the internal circulations. So means China want to become more independent. Okay, so the other thing is RECP. So it's a Regional Comprehensive Economic Partnership. And we all know that this partnership is without US. What does this mean? This actually means it will become more regionalization. So what does regionalization means? So it means with this region, right? For example, Europe is a regionalization. Different countries, they within this region, they increase the dependence on you, but without this region, they don't depend on other countries outside of this region. And actually, China want to create their own region, and depending on themselves. So what US did before is US actually create its own region, and what United Nations wanted to do actually is they wanted to make the whole world as a region. It was called globalization. But as we are seeing now, is globalization actually failed. And I would not like to say it's failed, but I would like to say it did not meet the globalization, but become more regionalizations. It's different countries, they will have their own region, create a region, and the regions start the conversations. And this may become a trend in the next few years. And also countries may seek for other regions with high growth potential like Southeast Asia. I would like to mention one very interesting factor that during this COVID-19, actually a lot of manufacturing companies move out from China and also move out from US. Why? Because for China, right, the government actually can control a lot of things. Then during this COVID-19, they shut down every factories without any I would like to say without any negotiations. So a lot of manufacturing companies saw this and say, okay, so the supply chain will got impacted due to the strong control by the government. However, for US, right, they also want to move out from US. Why? Because for US, the government lose a lot of controls, and when the country face the pandemic like COVID-19, such unexpected pandemic, it will cause the mess. So US and China situation in this COVID-19 are two extreme cases. And those manufacturing companies were aware of this extreme case, and they want to move out into those more with high growth potential and with more like friendly country governance like Southeast Asia. So therefore, I would like to say in the future, the different companies, they will have different strategic movement in terms of because of this impact by the COVID-19, and we all see that a lot of companies actually move their headquarters into come into Singapore due to this COVID-19. So in the future, to summarize the US-China trade war, actually is the trade war will still exist. We cannot avoid it because China is growing and the US was and is now currently is the number one. There definitely have some competitions between US and China, and they are still finding the way to compete with each other, and they are still finding the balance. So what retail investors need to do is when those like big companies are finding the balance among each other, right? Retail investors should find the trend. So what the trend is? The trend is for now is ESG. And then you may try to invest in ESG counters and also ESG ETFs to follow the different directions, because for US, right, with the Binance winning, ESG becomes a hot topic, and for China, it's not only for China but also the whole world actually are considering about different like ESG issues. The most important issue is like environment issues. So ESG is a general trend. So when you try to follow the general trend, right, you will find the good opportunities in terms of the general trend. So until now, I have finished my sharing. So if you want to invest in stocks or ETFs, actually you can open the Cash Plus account with us. And if you are new in this Cash Plus account, right, you will enjoy the 5 free trades when you open a new Cash Plus account with us. And for the reason why we recommend you to open the Cash Plus account, because ESG content and the ESG concept related ETFs are most likely is foreign counters. And actually for foreign counters, the commission fee for the commission fee for Cash Plus account is the lowest one until now. And even if you want to trade Singapore shares, Cash Plus account, the commission fee is also considered as the lowest one. Also, if you want to trade CFD is also another kind of product you can trade. You can trade stocks and the ESGs. Maybe you wanna short certain like low ESG performance company in the future. You can use ESG because you cannot directly short stocks, ma. So if you want to open a CFD account, this is something you need to consider about. So you need to, for CFD is a derivative product. So on the MAS regulation, you need to pass CKA. So if you fail the CKA, you can go to the website and do a short e-learning about what CFD is. This is a disclaimer for this webinar. And then now I would like to open for the questions and the problems. You can type your problem and the questions in the Q&A panel, and I will answer questions accordingly. Then remember to type your questions in the Q&A so we can see. So I saw a lot of investors, right? Actually, they ask about what kind of ESG counters companies or ESG ETFs you can look about. Okay, so what kind of actually there's several industries you can look about. So the very first industry is very direct one is EV car. EV car actually EV cars like I won't mention any specific counters because you all have those counters in your mind. I believe so. Yeah, so EV car is one of the counters you can consider about. Then another one is I would like to say is biomedical. Because for biomedical, those biomedical companies, especially the sectors, it is one of the key, actually, it is one of the, I would like to say, most beneficial sectors during this COVID-19. And now, actually, a lot of investors raise awareness in terms of this one. And other than these two very obvious one, like, right, I would like to mention about one thing called SaaS, is software as a services. Why software as a services is a investors? It is a good investment choice. Is SaaS actually is to efficient your governance factors. So SaaS software as a services is a overall concept of the actually it's hard to explain about software as a services, but you can just understand from the word software. So it's you provide software, but it is a service. So SAS actually help corporate to make their process efficient and if more effective. So this is one of the points in the governance part. And actually, there's one ETF. It's called. It's provided from provide from iShares. It's iShares MSCI KLD 400 Social ETF. So actually, this ETF, right? Is what this ETF is doing is to track the investment results of an independent of an index composed of U.S. companies that have positive environmental, social, and governance characteristics as identified by the index provider. So later maybe Oh, okay. So later we can type this ETF in the question part. So you can do a research on this. And also Invesco Solar ETF tracks an index of global solar energy companies selected based on the revenue generated from solar related business. So maybe yeah. So later we can type the ETF in the chat. So for the source ETF, right? You for your ESG investment, right? You can go and see their metrics and to see you can go and see their performance first. Yeah, you can try to compare this performance with those without ESG metrics. Then you can do a little bit research on this ETF. Then you can yes, I believe we have types of ETF in the chat. You can check about it. So one is SCI, one is Invesco. I saw some people ask about how do we do the research about to see if a corporate use ESG strategy to value themselves in ESG. Actually, it's quite easy. It's when you search about a corporate, right? There's a aspect now called there's an aspect called corporate social responsibility, yeah, CSR. So in the CSR part, it's normally when the corporate is stating their ESG strategy. So you can take a look about the CSR part. The one is most related to ESG. Okay, so what are the infrastructure and green technology companies that will benefit the most under Biden? So the very first infrastructure I would like to say actually is the transportation. Because for Biden, right, actually they invest in the transportation, especially in the transportation to increase the connectivity between different among increase the connectivity from remote area. So actually, the transportation infrastructure actually will become one of the sectors that will benefit most under Biden. For the ESG ETF, right, you can see for if you go and check the MSCI and the S&P those ETF, right, their metric use is different. So actually, it depends on your sometimes ESG depending a lot on your own judgment. So especially on it, your own judgment is on which aspect that like the global trend will be, and so you can see for S&P they focus on a lot on the fossil fuel free, but MSCI they focus on different aspects. So when you take a look into the different ESG ETF, right, you can choose to focus on certain factor, or you can choose to mass invest in different factors. Okay, so another I would like to say another industry, another sectors which can get benefit from Biden's win is telecom. Actually, it's no matter Biden or Trump win, telecom will always become one of the sectors growing fast because of the 5G and also because of the smart city focus. Because 5G is one of the strong element in the smart city, and the 5G is related to telecom. So actually for US counters like AT&T, actually you can have some expectation on them. There's another actually factors I would like to mention about transportation. Actually, for transportation wise, there's another industry growing will also improve transportation industry, which is e-commerce. So actually, a lot of logistics companies they build warehouse with a huge growth in the e-commerce. Actually, a lot of companies, but it's not a US company. Like there's a one Hong Kong counter called CTO Express. Yeah. Then actually they are trying to expand they are trying to expand globally. They are trying to expanding globally with overseas logistics. And the one is specifically in the e-commerce. And if you are looking at some like a high growth industry, logistics should also be one of your consideration. It's called ZTO, ZZTO. For data technology, right? Um, Personally, my point of view actually is, as I mentioned just now, is more towards SaaS instead of like hard technology, like very hard technology. The reason why we should look into the SaaS. So SaaS, some people may not familiar with this concept, but I would like to mention one company is Salesforce. So Salesforce is considered as a SaaS company. So for them actually they provide a flow platform for companies to process their data with the client. So actually for data central, I would like to say it's not the data central you store the data, but it's the technology how you process the data and how you utilize the data is for those like SAS company is should be more into attentions. So there are a lot of like trending SaaS companies. Some actually are not listed, but most successful one is like Salesforce, SAP, and also there's one specifically called e-commerce SaaS is called Baozun. It's also listed in US. And recently it's a Snowflake. Actually, it is quite a hot IPO. Snowflake actually is also considered as SaaS company. So what you need to look at into there's the recently the SaaS focus is on CRM. So there like Salesforce and the SAP CRM functions systems. So for those companies who focus on SaaS, I believe retail investors can take look into this area. Any last two questions? Okay, so actually other than the what I mentioned just now, the sectors, right? I believe because I saw some questions about like technology side lah. So for technology side, right, the big big techs can be one of the one of the Biden's proposal, but to be honest, under under such under US the market regulations, it is also hard to really break down the big techs. So for the future, if you want to look into technology, maybe you can look into the fintech side, especially for the payment wise. So we all know that fintech is a trend, and also companies like also Southeast Asia companies like C Group, right? C Group also list on US. I believe some of you guys have heard about this name C Group. So it's the parent company of the Shopee. A lot of group companies, they are trying to do fintech, especially in terms of the payment method and the maybe also the blockchain technologies. So for fintech wise, what retail investors need to pay attention to is a license. Uh, yes, it's a license. Actually, Singapore has already issued license for the digital currency, and this do increase actually is high in the I would like to say, as Singapore government is open for blockchain and especially the digital currencies in terms of the recent actions. And for example, DBS is one of the very first bank who is going to list the cryptocurrency in their investment exchange lah, basically. So in this case, right, those companies who has a especially the fintech license, fintech like digital currency license, you can pay more attention into this company. Okay, so just now I talked about the license, right? So just for your information, actually the MAS issued the digital banking license for digital banking license. So this is something you can look into for Singapore market. The first license is to a group by Grab and Singtel. So the group actually is Grab and Singtel. They combine into a different to an independent group. Then they go and bid for the digital banking license. The second one is a C group. So it's the parent company of the C group. And also with the news, the C group price goes raise very quickly lah. Then the third one is Ant Group. So we all know Ant Group actually the China government suspend the Ant Group IPO, and it do impact the business, especially for impacts the share price of the Alibaba. However, the good news is actually Ant Group is one of the companies that received the MAS digital banking license. And the last one, because the MAS issued 4 digital banking license. So last one actually is a China company called Ludi. So actually it is a company doing hospitality and the real estate. Is called Greenland. But they are also trying to transfer their business into digital banking. So in terms of the fintech wise, you guys can look into such company, especially in the Singapore context. Okay, this webinar will be ending here, and we really thank you for your time to attending this webinar, and please look forward to the Thursday webinar where my colleague would share some of the portfolio management skills that most retail investors should be looking out for. Thank you, and have a good night.